presentation. And now I would like to invite Dr. Bahaaeddin Alareeni from the College of Business and Finance to give his talk titled Does Corporate Governance Influence Earning Management in Listed Companies in Bahrain Bourse? Dr. Baha, please.
Thank you very much. Okay. Good afternoon, everybody. Really, I don't know how to link the research paper topic that I am presenting now with the previous topics, which is basically connected to the machine learning and the computer science and simulation used in the enhancing the emergency departments. But basically, I would like to say that I have a little bit background about the machine learning that can be used in order to predict a company's future position, as I use them in developing statistical failure prediction models through my PhD. So, but today, unfortunately, presenting something a little bit different about your topic. I don't know how to link them, but the topic as shown here in this presentation, talking about the corporate governance and its relation to the earnings management and its relationship to the earnings management. You know, a lot of people today ask or calls for implementation of corporate governance. Here are the topics I'm going to cover through my presentation. Everybody knows that over the past few decades, there have been a number of well-known scandals like Enron and General Motors bankruptcy. So what is the most important point that the researchers found that the earnings management practices are typically at the core of such scandals. They found that the managers use some of the flexibility allowed by the accounting practices and policies in order to increase or decrease the income, and namely in order to affect the accounting profits. So fraud cases in the stock markets have proven the existence of unethical behavior, and this revealed a need for transparency and credibility and reliability. So therefore, the high profile of corporate failures have heightened the global awareness of the importance of corporate transparency, reliability, and accountability. Therefore, through the years, the regulators in all over the world establish corporate governance code to maintain the investitor's interest, to reduce the conflict of interest, to improve the confidence in the stock markets in all over the world, and also to increase the auditor independence. So it is supposed that the high level of corporate governance may mitigate the earnings management practices, which could decrease the magnitude of companies' failure or bankruptcy, and then positively affect the shareholders or the other related parties. Many prior studies have investigated this relationship, the relationship between corporate governance and earnings management, but unfortunately, most studies have been done in developed countries like USA and UK, and a little number of studies have been done in developing countries such as GCC countries and Bahrain, more specifically in Bahrain. What is the most important point here, that the studies either done in the developed countries and developing countries have shown a progress in the equality of earnings due the implementation of corporate governance codes. As we reported, that much is less known about the relationship between the corporate governance and earnings management in the developing countries, more particularly in GCC countries. The results maybe differs from country to another depending on the sample size, year of data, and industry, and also it could depend on the economic environment. For instance, in India and China, a couple of authors found that there is a significant positive relationship between the CO duality and earnings management, in the sense that boards that have directors with multiple functions exhibit more earnings management. On the other hand, in other countries, for example, in Mexico, the other researcher called Castinda 2000 did not support a positive relationship between corporate governance and earnings management. And they found that the majority owners occupy 85% of Mexican listed firms, that the owners occupy 85% of the Mexican listed firms. I mean, they occupy dual roles. They have two positions, for example, board of director and the CEO. In this regard, I do believe that there is a real need to test the relationship between the corporate governance and earnings management, as in Bahrain, as Bahrain has different economic characteristics, and we are using here in new data from the year 2011 until the year 2015, as the situation in Bahrain remains questionable. Bahrain's, as you know, recently experiencing economic difficulties due to the increase of oil prices. As when the oil prices are increased, eventually, or thus the production cost and the cost in general will increase. Therefore, it is expected that there is increase of possible losses. And when we have losses, we expect also that the managers may practice earnings management in order to increase the net income in the current year. As I reported, that much less is known about this relationship. I mean, the relationship between the corporate governance and earnings management. Therefore, the results may differ from year to another. So here in our study, here in this study, we are examining if the companies listed in Bahrain Bourse practice the management of positive income increasing discretionary accruals, or management of negative income decreasing discretionary accruals. Further, the study also examined the relationship between a set of corporate governance, for example, the internal ownership, and the board size, board independence, and CO duality on earnings management. So we selected a sample, as is shown here in this slide, consisted of 20 firms listed in Bahrain Bourse. Of course, the study population consists of the whole listed companies in the stock market, but we selected the study sample based on two criteria in order to get more robust results. For example, the companies must be industrial or services companies, and also for the availability of data from the year 2011 to the year 2015. So all the data were gathered through Bloomberg database in order to get accurate results. So as is shown here in this slide, we have 20 listed companies, 15 services companies, and 5 industrial companies, and 100 observation with 100 observation. In order to measure the discretionary, in order to measure the earnings management, we use the discretionary accruals estimated by one of the most commonly used model in detecting earnings management, which called the modified Jones model 1995. This model has, of course, several advantages over the other models used in other studies. So as is shown here in this slide, this is the modified Jones model, consists of several variables. Of course, this is the equation number 1 and 2 and 3. So in order to calculate there the discretionary accruals, we have to use the 3 equations. For the study model and the variables, as shown here in this figure, we have 4 independent variables and 1 dependent variable. The 4 dependent variables are internal ownership, board size, CO duality, and the board independence. First of all, we estimated the discretionary accruals for each company in order to determine if the company practice earnings management or not. So the earnings management practices, as we mentioned, measured by the discretionary accruals using the modified Jones model. In addition to the independent variables there, we used a set of control variables such as assets growth, earnings per share, financial leverage, and total assets. And this is the, as is shown in this slide, this is the our study model consists of the dependent variable, which is the absolute value of discretionary accruals, in order to, and also other factors, which is the internal ownership, board of directors, and CO duality, board independence, assets growth, earnings per share, and the financial leverage, and finally the total assets. And in this table, in table number 1, in table number 2, this table shows the description of each variable. Unfortunately, you haven't time to explain each variable, how it is interpreted or calculated. And here, after we included the descriptive analysis, the mean and median and the maximum and minimum, as is shown here in this table. For example, the number of boards, the maximum number of boards of the study sample is of 16 members, and the minimum is 7. And for the duality, which was measured by the directors, if they have multiple functions in the company or not. And if we move to descriptive analysis, here are listed the person correlation, the statistician and the other specialized person, know very well that in order to prepare the regression analysis, we have to prepare or to formulate the person correlation, and also the VIF and the other statistical test. So here it is included that included the person correlation. From the table, it is showed that there's no multiple correlation between the study variables. Here is presented the time fixed effect model. Before preparing the time fixed effect model, we prepared or we tested which is the best model can be used, the fixed or the random effect model. So from our results, we found that the best model can be used, the fixed effect model. As is shown in this table, here we have 4 variables are significant. This means the assets growth and board size, board independence, and the internal ownership have p-value less than 5%. This means that they have a significant relationship with earnings management. And here are the R square within and between and the overall statistical analysis. To summarize the results extracted from the table, we suppose that the internal ownership negatively affects earnings management practices, but from the results we found that the relationship is positive, and we assumed also that board size negatively affects earnings management practices, and this is also supported by the results included in the regression analysis. And in the third hypothesis, we assume that CO duality positively affect earnings management practices, but unfortunately, we didn't find any relationship between the CO duality and earnings management. And lastly, we assumed that the board independence negatively affects earnings management practices, but this is not supported by the study results. Maybe for the hypothesis number one, I think that the sample size is one of the study limitation. For this reason, we couldn't find a significant relationship between the earnings management and CO duality. To conclude here, one of the most important results in this study, we found that most of the companies listed in Bahrain Bourse, I mean the services and industrial companies, are practicing earnings management through income increasing. This means through income increasing means that they are trying to increase the income in order to attract more visitors, in order to permit people to visit in the company, in order to enhance the company's picture, in order to get more benefit if the position is the opposite. The relationship between the variables also must be tested, and because through the literature review, we found different results. For this reason, it is important here to test the results from time to time, from country to another, from industry to another, from economic environment to another one as well. We found also that earnings management is negatively related to board size. This means when we have larger board size, the earnings management will decrease. The earnings management will decrease. So here it is suggested to the regulator to increase the board size as possible in order to mitigate the earnings management practices in the companies listed in Bahrain Bourse. The board size then in Bahrain plays a vital role in protecting the interest of shareholders and in restricting the earnings management. And regarding the board independence, we found it is positively related to earnings management, and this confirms that a larger number of independent directors is associated with the higher level of earnings management. The findings also showed that the internal ownership is positively related to earnings management, confirming that the internal ownership can have a negative impact on the firms, since the greater manager's authority may lead them to make accounting decisions which reverberate person aims in order to get more benefit. Especially the managers, they are trying always to increase the profit to get more benefit, especially the managers that are working in the top management, as their compensation depends on the percentage of the profit at the end of each year. The findings also showed that the CO duality does not have any effect on earnings management, and maybe this is, as I reported, due to the small sample size that I have used in this study. So it is recommended that in the future study to use larger sample. The relationship also between the earnings management and earnings per share is negative. This suggests that the earnings management increases as earnings per share decrease. So when the earnings per share decreases, directly the managers will tend to practice earnings management in order to enhance the company picture to be have more profit. And also for the control variable set, I didn't find any relationship between the control variable set with the earnings management except earnings per share. Finally, the study limitation, as I presented in my presentation here, that I used a very small sample size due to the lack of data. Of course, it was for 5 years from the year 2011 2015, but in general, it's still a small sample size, and this is not my fault. It is the problem of the small sample size of Bahrain Bourse itself. Finally, the study did not include all the corporate governance characteristics. Okay. Also for the same problem due to the availability, the lack of available data. So to complete the loop, to close the loop here, it is suggested to extend the study to a larger number of companies by using another stock market like Saudi Arabia and other countries that they have large listed companies in the stock market. Thank you very much.